In this video, I'm going to share with you my shares investment portfolio for December of 2022. Now, November, December has been a very volatile time in the market again, where we saw a nice peak at the end of November, and in the beginning of December it was all well, and then we saw a crash. Now, my shares portfolio does not have a lot of money, but it is representative of someone who is beginning to invest, puts a small amount of money, and therefore the whole purpose of this investment portfolio is to show you how putting a small amount consistently can actually lead to very amazing results in a year or two. Now, in my opinion, this is the whole point of investing. It is a slow growth. It is not a get rich quick scheme. And I think videos like this will be very helpful for beginner investors because it shows you the habit of investing, of putting your money aside into something that doesn't grow quick, which then gives you those habits. And in the future, when you have more money to put in, you will understand that investing is probably one of the better options for your money. Now, remember, this video is not financial advice. Some of the stocks, or if not most of the stocks that I invest in with my shares portfolio are not stocks that I would actually invest in with my main portfolio. You can check out my main portfolio over here, which has most of my money in it, and my main strategy is to invest in ETFs and not individual shares. Now, shares is a good investment provider because it allows you to actually invest in fractional shares with as little as £1. So this gives me a good opportunity to invest in companies that I normally wouldn't, just because it requires such a small amount of initial commitment. Now remember, this video is not financial advice, and with that being said, let's go straight into the portfolio. So when I log into my shares app, you can see that the total value of the current portfolio is £44.60. So compared to last month, this is a bit of an increase. So if we press 1 month here, we can see the change in our portfolio. So like I said, we had a nice peak at £47, and now it's gone all the way down to around £44. And this is because right now the stock market is very, very volatile. There's never a good or bad time to invest in the stock market. It doesn't really matter when you start it because the stock market is always going to be up, it's always going to be down. There's no point in timing the market. You're better off just to start investing. But remember, not all investments carry equal risk, not all investments carry equal reward. So that is the reason why I started this YouTube channel, to show people that investing doesn't need to be as hard as it sounds like for other people. One of the reasons why investing sounds so difficult is the fact that a lot of financial advisors make money off giving people financial advice for a lot of money or a percentage of your total gains. That being said, there is a lot of terrible advice on YouTube. This video is not financial advice, so don't take this as stock picking advice. Like I said, I wouldn't put more money into this. The company shares is not currently FSCS protected, which in the UK it means Financial Services Compensation Scheme, so your money is protected up to £85,000 per account, so it's not in this. Therefore, that is another reason why I don't put too much money into the shares portfolio. So let's see what I have invested my money in. Alphabet, which is Google, so it's a company or parent company Google, which owns a ton of things such as Android, YouTube, things like that. So that is down by minus 17%. As you can see, that is a £2.66 loss. If I had more money to put in, I would put it into Alphabet first because that is down a lot more. And I believe personally that Alphabet is a very good company to invest in. They have so much free cash. They are the go-to search engine provider. They're almost everywhere. They have established themselves as one of the leading tech companies. And right now, I think it is a good price to buy because I think it will go up in the future. But of course, I don't know if it will. Don't take this as stock picking advice. Next is CrowdStrike, and that is down by 15%. So all these technology companies not doing great. 15% is quite a decrease, and as you can see, the stock prices had peaked after the pandemic and now they're all the way back down, but still not crashed. Apple is another company that is also, of course, really good company in terms of their financial balance sheets. They have a lot of cash. They have wormed their way into almost every consumer in the planet with the Apple ecosystem. So I think it's a good company to invest in, and I would put more money in when I top up my account. So as you can see, in Alphabet I have 0.016 shares, CrowdStrike I have 0.01 shares, so very small amount of shares, and that is because shares allows you to buy fractional shares. Pinterest is down by 9%, and of course, if you know about Pinterest, they're an online kind of social media company where you can show off designs and essentially someone else can pin it. Tesla, I have 0.02 shares, and that is down by 8%. So this part of the portfolio, nothing here is looking good. Everything is in the red, but that does not mean much as a long-term investor. If you've invested in companies that in the long term you feel like are going to be more valuable, they are going to survive the current situation, the current climate, then of course it doesn't matter if they're down in percentage wise because it just means you're buying them at better value. So Tesla down recently, so over the past week you can see it's gone down and up, so swings and roundabouts. And that could be due to the fact that, you know, Tesla is a technology company, but also the CEO Elon Musk has been preoccupied a lot with his recent acquisition and him being CEO of Twitter. So Amazon is down by 8%. Also, Amazon is a really good company to invest in my opinion, because they have a lot of cash. They have their way in almost every household in America and the UK, because of course they sell almost everything. They also have the Amazon Fire Stick, which actually I bought recently and I think is actually really good. I actually bought the Google Chromecast first and I returned it because I didn't really like it, but the Amazon Fire Stick was not only cheaper, but it's actually faster and it integrates television very well. And the reason why I say this is because television is not dead. It just has evolved, right? People watch YouTube, people watch Disney Plus, Netflix, and things like that. So the way that we consume media, especially on television form, which is the fact that you have a sofa maybe in your living room and you have a big TV, you just sit on your couch or whatever you want to call it, and flick on whatever channel you want, as opposed to switching your computer on your laptop on and watching content like that. Amazon Fire Stick and others like that make it very easy to consume content, and that also integrates their Amazon Prime Video service, which gives them a lot more cash to work on to invest into Amazon. Long-winded way of saying it, but personally sometimes it's nice to invest in companies that you use yourself, because you realize the importance this company has on you and others. So Twilio, I have 0.05 shares in, and that's down by a massive, not massive, but it's quite a decent 7%. Airbnb is down by 5%, and as you can see over the past year it has a gradual decline, and that could be due to it recovering post-pandemic, but also during the recession. People are not going to be spending a lot on expensive Airbnb places, you know, not going on too many holidays. So going forward, maybe past the economic crisis, Airbnb would be a good contender. And we've seen the power of Airbnb in the past, it being very highly valued around the pandemic time. The fact that it came and kind of disrupted the whole hotel industry and like taking over whole cities and things like that. So Airbnb in the future could be potentially a good company to invest in. So the next company I have 0.03 shares in, and that's Colgate-Palmolive. And you've probably heard of Colgate if you brush your teeth a lot, or even if you don't. So Colgate makes toothpaste amongst probably other things such as toothbrushes too, and that is down by only 5%. The next is Johnson & Johnson, which is a dividend aristocrat. So they've been paying dividends for I think 60 or nearly 60 plus years. And Johnson & Johnson, famously known for their talcum powder and also pharmaceuticals, they are down by 4.6%. Next company I have is 0.01 shares. So of course, none of these are full shares, very small amounts. As you can see by the total portfolio amount, not a lot of money put into them. And I'm probably not going to add a lot more companies in this. I feel like it is already diversified. I have lots of different stocks. If even one goes to zero, I'll be okay. But Pepsi is a good one to invest in at the current moment, because during recessions, people tend not to cut a lot of spending on junk food, such as like McDonald's, Pepsi, Coke, things like that. Actually tends to go the other way. People buy more to deal with, you know, the stresses of being in a recession and things like that. So that is only down by 4%. But we can see over the past month that it's gradually just going up. So Intuit is almost no change, and I have a very, very small amount. So I have 0.0003 shares in that, and that is down a lot from its post-pandemic peak of $600, and now it's trading somewhere around $400, so hopefully that may go up in the future. 3M, another big company I spoke about last time, they're almost everywhere, and that is only down by 1%, and they do pay dividends. Coca-Cola, I have 0.06 shares, and I'm probably going to be buying more of that soon. That is down by 0.33%, which is not a lot at all. So Nucor up by 1%, but of course when you buy this small amount, you're almost no difference. Like even 10% might not make any difference to you. 1p gain, that's not a huge amount. So McDonald's, very steady at 3%, and I have a very small amount invested in McDonald's, and that's 0.004 shares. AMD, a company that's doing extremely well, and their graphics cards are coming out, next week. So I have 0.06 shares in AMD, and that's up by around 4%, so that's a 12p gain. So as you can see, I have invested £3.13 into AMD, so I've essentially bought 3 fractional shares, and that's up by 12 pence. Next we have Procter & Gamble. They make all sorts of products. Let's go and actually see what their overview is. So they make consumer packaged goods, so things like shampoos, skincare products, Head & Shoulders, Pantene, Old Spice. So I have £1 worth, and I've gained 4 pence on that. Starbucks, another company that usually does well during recessions, is up by 5%. Nike is up by 9%, which is really good. And Caterpillar has gone down a bit, but it's still up by 13%. As you can see with the past month, it has dropped quite dramatically, but you know, that is why you would invest regularly. So if I bought here, I would have reduced my entrance point, and in the long term I would probably be making lots of money. So if I click here, you can see that I have 3p in cash, and this was from dividends. So I'm actually trying to find out where the dividends came from, and I don't think there's an easy menu to see that. Okay, I think there is no menu that you can see all your dividends, but I think that if you go into a specific company, so I remember Starbucks has paid a dividend. So if I go into Starbucks, we can see through the activity that they did pay me 1p at the end of November. There's no menu that you can see all your dividends or your activity, such as buy and sell in one go. Maybe that's feedback to the creator. But I think overall, Shares is a very easy to use investment product, and it allows you to maybe invest in companies that you wouldn't have just put in like £1 or £2 and see and track those companies like that. Or if you're a beginner investor, you can start putting £1 or £2 into companies just to get a hang of investing, and then when you're ready, you can start investing more seriously. But if you're quite young, maybe if you're 18, 19, something like Shares will be an amazing place to start getting invested and see over the years or months how your money actually does start to compound. Make sure to check out some of my other videos, and I will see you in the next video.